Good evening. This is the Nabwic. This is the meeting of the Nabwic Investment Club. Um, it is February the 5th, and it is now 6:51. So we're going to get started. Um, let's let me give you our disclaimer first. So, this is a meeting where we discuss stocks. Stock that we own, stock that we want to purchase, stock that we may want to sell. What's important is that nothing that we discuss should be taken as a recommendation. Please do, when you decide that you're interested in a stock, please do your own homework. It's going to be very important. Now, I want to make sure that we welcome everyone that is here. I want to welcome all of our meeting members and anyone else that has come to participate and learn about Nabwic Investment Club. What's important for you to know about us is that we use the better investing methodology. It says on the agenda, better investing principles, and these are the principles that we use as we study our stock. We invest regularly. We reinvest our earnings, meaning generally our dividends that we receive. We buy stock in high quality growth companies and we diversify our portfolio. Diversification just means we try to have, and you'll hear about this later, we try to have 25% small, 25% meat, sorry, 25% small, 50% medium, and 25% large. We also diversify in all the different sectors. So I think it's very important that you know this. Just make sure that you know that we are welcome. Now, I'd like for us, before we get started, we actually have a blessing over our meeting. Is there anyone that's willing to bless the meeting? All righty then. So, dear most heavenly Father, we're going to ask for your spirit to be in the midst of this meeting. Give us understanding about money making money. Give us understanding about our purpose in life. We ask that you cover all of our members, all of our people that are here visiting, so that they get clarity on who they are and their purpose in life. We look forward to clarity in this meeting, order in this meeting. We ask all things in the blessed name. All righty. Thank you for that. Now we're going straight into roll call. All members that are in attendance, please say your name. So I'll start. Sharon Jackson.
Carolyn Modest.
Doretha, are you on mute?
Oh, I'm so sorry. Doretha Dennis.
Okay. Is Ann still here? Okay. Mia, are you here?
Mia Ferguson.
Okay, thank you so much. And I'm not sure, but I don't believe that Nicole has joined us yet. And I believe that Valencia is still taking care of private family matters. Doretha, I'm going to ask you, do we now have a quorum present?
We do.
Okay, thank you so much. So a quorum is present, so now we're going to continue. So we now have the approval of the agenda. The agenda has been distributed. Are there any additions or corrections to the agenda? Is there anyone that has read over the agenda and needs to make any changes? If not, we are going to accept the agenda and move on. Going once, going twice. Okay, let's move it. All right. So the next thing is the minutes were distributed. I believe that Doretha was faithful in sending the minutes out on Wednesday of this week. So are there any corrections? If no corrections, seeing none, the minutes can stand approved as presented. Okay, the next thing on the agenda is the treasurer's report. Carolyn, you ready?
Yes, I am.
Thank you.
Do I need to share or just read it? Okay, let's
If
see.
you can share, that would be great.
Okay. Can everyone see? Give me 1 second. Let me close. Okay. So today is the Treasurer's Report as of January 31st, 2026. And we have the membership dues collected for the month of January, $75. The assessment that collected for the month will be $90. We had an expense of $10, advance payment of $25, giving us a total in TD Bank of $854.32. Total cash available will be $854.68. For the accounts payable, I did not put any amount, but we'll have the taxes to be done, the CPA and taxes, plus the K1s, and also to file the partnership with the state. So I left those blank till I get the actual amount that is due at that time. The total portfolio for the month ending January 31st, 2026 is $15,990.89. And that's the end of my report. Any questions? Any comments?
Good job.
Thank you. I will stop sharing. Thank you very
Okay.
much.
Thank you so much. Okay, very good. So next on the agenda, thank you for that. I heard no comments, so we are going to accept the treasurer's report. All right, next up is the portfolio manager's report.
Absolutely. Good evening, everyone. This is Doretha Dennis. Not only do I serve as the secretary, I also serve as your portfolio manager, and I am going to share my screen. This particular web page that I'm showing is my iClub, and this is a tool that we use um, um, faithfully. Our treasurer uses it, and all of our members have access to this platform. You are able to, right now, you are viewing what we call a heat map. Let's take a look across the very top, though, because I want you to see all of the different things that are available to us. The taxes, the watch list. There are many reports in here. Um, Voting, if we decide we wanted to vote on a particular person to allow them to come into the group, we can write up a poll and send it out to our members. File storage, a calendar, and then there are videos. uh, let's move right over here and take a look at our heat map. This particular map is used to help us create new ideas for stocks. It is green, red, and yellow. Uh, right now, we don't have any in yellow, and that's great. Green. Let me see, just one more second. The larger the box, the more individuals take a look at this particular stock to see if it is a stock that they may want to do. We do an SSG, and that helps us to determine if this is a stock we may want to buy. The greener the box, the better potential. The redder the box, the less potential. Right now, you can see the total securities we had. Our treasurer just shared that with us. We don't have any cash right now, 16 cents, but we do have $15,918 in our portfolio. Let me just pull up a couple of our reports that we use. As you can see, Unified Monthly Report is a report that our treasurer always shares with us. The valuation statement, let me let you see that quickly. This particular report shows the number of shares that we bought, that we own, the date that we bought them, the market value of this particular stock. And one particular column that we keep an eye on is the gain and the loss of that particular stock. And you can create a report, print it out, and keep it, download it and keep it. One other report that we like to look at is company size. This particular report shows us the size of the company, and the market value and the percentage of that company that's in our portfolio. We have a couple of small companies. We have about 6 to 8 mid-size. We have three or four large ones, and then we have those mega stocks. Those stocks that make over $200 billion a year. We have those in our portfolio also. Disney, Facebook, CVS, and Amazon. Yes. Okay, I'm going to show you just one more report. It also we are each are assigned stocks that we look at, and this particular report would show your assignment, and did you connect an SSG to it? We are to connect an SSG every month, so we can keep an eye on the growth of that particular stock. Let me see. Sharon loves this particular one. It is Sharon. I always have a problem finding it. Is it global diversification? Benchmarks. There it is. Benchmarks. Now this is a pie chart that shows. Is this it, Sharon? I don't think this is the one I wanted to show. But this is sector and industry diversification. Each stock falls under an industry and a sector, and that's what we're seeing right here. But that's not the one I wanted to show. I was looking for the benchmark, how we compare to the S&P 500.
You know what, Doretha? It may not be the one that you wanted to show, but we do
Okay,
have a couple of visitors. And one of the things that I had mentioned earlier is that
okay,
we try to have a well-diversified portfolio. And
okay,
one of the things that it shows that it indicates is that we are pretty diversified. If you go down just a little bit, it
okay,
does show that we are pretty well diversified in the stock that we have purchased up to this point. Okay, that's the only thing. I know that it also
mhm.
shows sectors that's not represented at the very bottom. It shows
Bottom.
there's
There we go.
yes,
Let's see. Yes, right here.
right.
Sectors not represented: secular, super sector, the basic minerals, the consumer defensive, utilities, and industrials. We do not have any stock in those particular sectors.
Okay.
Okay,
I
good,
think
good.
so. And information, and I don't want to hold you up, but I just want to say, just in case visitors or anyone want to say, when you sit in on other groups, other clubs,
Mm-hmm.
many
Right.
of them do not have all of the sectors. So I don't want anyone to think that we are just ignoring what, no, not that is not uncommon. Okay. I'll
Mm-mm.
be quiet now.
And Sharon, some analysts say to us that you don't have to have a stock in every sector. You can be diversified with what you have as long as you have good good growth stocks. So yeah, don't have to have a stock in every sector. Yeah, thank you for bringing that up. Okay, so I'm going to show this last one. This is the benchmark. We've been a part of an investment club since 2018. And this particular little section right here shows our lifetime since February of 2018 to February of 2026. And we're just above the zero line, 0% line compared to uh, the S&P 500. Okay, that's it for me, Sharon. Are there any questions or other comments? Love to hear from you.
Well, I'm going to say that as a result of what you just mentioned, it is important to note that we spent a good part of the year last year restructuring. So
Yes.
we sold a lot of stock that were losers, and we are um, moving into more of what we consider the growth stock. I didn't want to think that people thought, well, anyway, doesn't matter. We are restructuring. We spent a lot of time restructuring. Thank you, Dorothy. I promise I won't interrupt anymore.
You're welcome. No worries. Okay.
Alrighty, that was very good. And so let me ask you, were there any questions regarding the portfolio manager's report? If not, we shall push on to the stock watcher's report. Any questions? Okay, let's do a review of the portfolio.
Okay, so our portfolio, I'm first on the list. Our portfolio consists of 16 stocks, and what we've done is divided them up into we have 7 members. I took 3 and everybody else took 2 of them. So I'm going to start with I have Qualis, Cactus, and Amazon. And I'm going to start with Amazon. Today's price for Amazon, $243.04. A year ago, this time, $224. So the stock is up compared to this time last year. They are a large, or we consider them a mega stock. They are part of that Magnificent Seven group, 7 of the largest and most influential technology companies in the U.S. stock. Um, some financial health grade Morningstar, which is another tool that we use, gives them a B. Value Line gives them an A++. They are part of the internet retail industry, part of the consumer secular sector. This was something I learned today. I had not really considered this, but Amazon, and I guess this what makes them one of those 7 Magnificent Seven stocks, companies. They have over 100 subsidiaries that fall under them: Whole Foods, Audible, Ring, Amazon Pharmacy. They have an autonomous car company. They have games. They have MGM, Zappos, Goodreads, and they do have 2 semiconductor companies. And we know those companies are really on the move these days because they're creating all those little chips that we need to put into our computers and all of our technology. So yes, 100 subsidiaries. I say that is awesome. For 2025, the fourth quarter conference call was held today at 4 o'clock. So the report that was given from that call, we will review it next month. I have some information to share with you next month regarding that call. Okay, Amazon for the third quarter, they earned $180 billion as compared to last year this time, which was 159 billion. I think even though it was more money, and I think they are still making, when you're making this kind of money, I think you're still on top. This was a 13.4 gain for them. So awesome, awesome, awesome. Analysts project that long-term investors should hang in there for the long haul, that Amazon is going to be doing some magnificent things. I also have some additional financial statistics for them. Sales, 22.8%. Earnings per share, 22.2%. Return on equity, 18%. That's awesome. Debt to capital ratio, 42%. Now that's a little high, but Amazon has been acquiring several different AI platforms, building up their technology. So their debt has increased some over the last year or two. A projected 2-year forecast for sales, I said 10%, and a projected 2-year forecast for earnings per share, I said 13%, kind of following what the sentiments of our BI members are saying. A recommendation, I said, let's hold that. Let's hold that stock. And if I had enough funds in my personal portfolio, I would buy one share today. Remember, as a disclaimer, we are not recommending any buy, sell, or hold for a particular stock. The next one I have is Cactus. The symbol is WHD. We have 20 shares of this particular stock. Today's price, $58.48. A year ago, it was $61. So maybe that might be an opportunity, jump on board and buy something. They are a medium company, between 100, their earnings and sales between 100 billion to 10 billion. Their financial health grade, Morningstar gives them a B, Value Line gives them a B plus. They are part of the oil and gas equipment services. That's the industry that they fall under. The sector is energy. Now, the last time I reported on this particular stock, this company was in the process of acquiring a company called Baker Hughes. This is a company located in the Middle East. They finally finished the acquisition. They gained 65% control of this particular stock. This is going to help them in their presence over in the other country outside of the United States. And that's a great move for them. Gas and oil went from $75 a barrel to $55 a barrel, which kind of hit hard for Cactus. Their third quarter, expectations were not as what they wanted. But I think the acquisition of this new company is going to make a difference for them. Some additional financial statistics: their sales, 20%, earnings per share, 59.9%, return on equity, 15%, and debt to capital ratio, 5.6%. Very low debt, and that is an awesome thing to have. Recommendation is to hold this company, even though their third quarter and probably their fourth quarter, the results has not come out yet. We're waiting for their annual report. We'll see how their fourth quarter did, but definitely the third quarter didn't fare too well. My next stock, Qualys. We own 5 shares. Today's price is $129. A year ago, it was $145. They are a medium company. Their financial health grade, Morningstar an A, value line a B++. They are in the software infrastructure industry and in the technology sector. They are a cloud security and compliance solution provider. They help businesses identify and manage their security risk. Let's see what else. Their earnings per share, they went from $1.29 per share up to $1.35 a share. Okay. Let's see. They recently gained some certification in some different other brackets, which is going to help them along the way. Some crucial sectors like healthcare, law enforcement. This certification is going to help them in these different areas. Analyst thinks that it's a promising investment. I do have a couple of other financial statistics. Sales 15.7%, earnings per share 29%, return on equity 30%, debt to capital ratio only 10%. That's awesome. And for this stock, I do recommend that we hold it. We're going to keep an eye on it since the third quarter wasn't too favorable. And then we'll see how the fourth quarter fared. And then we'll be coming back with some recommendations in the next couple of months. And Sharon, that's it for me. Let me see. And so Anne has asked us to put her at the bottom of this list. So we're going to move straight to Carolyn if she would share with us her stock. And Carolyn, do you need to share?
No, I don't need to share. I will
Okay.
just present.
Okay.
Again, Carolyn Mattis, and the two stocks that I will be sharing is one with the Walt Disney. The ticker is DIS. We currently have 17 shares in that company, and just for background, is that it's a global entertainment and media powerhouse with business in theme parks and experiences, media and networks, film, videos, streaming services like Disney, Hulu, and ESPN. It's in the industry is entertainment and leisure. And currently it closed today at 104.97. The 18 months target price is $88 to $179. And looking at the analysis and ratings and the financial sentiment, Wall Street sentiment is for Disney World is generally positive. Multiple brokers maintain a buy or strong buy, targeting 20 to 30% upside. Most analysts expect a long-term growth, but caution over the velocity of the market at this time. What I wanted to look at, at this time, I focus more on the last 5 years return on equity, which is the ROE. In 2021, it was 2.3. 2022, it was 3.3. 2023, 2.4. 2024, 4.9. 2025, 11.5. And as we can see that the average ROE was 48%, 4.8%. And with the recovery in 2025, as we can show that it doubled the amount. Its average, the 5 years, 2025 was 11.3, to even double of the average for the first 5 years. So at this time, looking at Walt Disney, most investors might be patient. If you love the stock, if you like the stock, you just have to be patient and have it for a long-term portfolio. At this time, I would just have it on hold, even though it's most said they might buy, but I'll put it on hold for now. The other stock that I have looked at is Zoom. Zoom Video Communication. The ticker is ZM. It closed at $89.80. We only have two stocks. Currently only have two stocks. In value line, it was the financial strength was a B plus, and the 18 months target price is $47 to 123. It's a hosting cloud-based solution for videos, conference, phone system, chat, and collaboration tools. The product includes Zoom meetings, Zoom phone, Zoom team chat, and Zoom contact center. Zoom revenue comes primarily from subscription services, mostly in America, but the global reach and the companies increasing, but embedding in artificial intelligence tools in their platform for future growth. Their competitions are Microsoft Teams, Crystal Web, and Google Meets. And I also did the exercise again on the past 5 years of the return to equity. In 2021, it had 30 to 35%, 2022, 23 to 28%, 2020, did I say 2022 was 23 to 28%, 2023 is 0 to 3%, 2024 is 8 to 11%, and 2025 is 11 to 18%. As you see, it had a down, it went down in 2023 seriously. But I think in the period when we had when the pandemic, that was most of the main system that was used. That's why the return to equity was 30 to 35%. So looking at where we at right now from the 18 to 11, we are recovering, but we have to bear in mind that Zoom business is highly based on subscription. And if enterprise decide to shift their spending, we definitely will have to look to see, is this a buy or not? So with just thinking that is based on subscription, I will put a hold on this. And that's the two stocks that I looked at. And that's it for me. Thank you.
Good job. And I'm kind of messed up because I thought I had Zoom. So if you don't mind, I'm going to add a couple of things to Carolyn's presentation. So a lot of what you said was what I would have said also. But the other thing is that Morningstar indicated that Zoom is undervalued. Carolyn told us what it was now, but Morningstar is saying that its fair value is actually $95 a share. It's almost $5, I believe, 5 or $6 that they're saying that it's undervalued. And the financial strength is a B plus, but they also said that because they have worked so hard in increasing the value and the quality of the products that they serve, that they have exactly what Carolyn said. They have been increasing their way in the market. But Carolyn also said because they are dealing with the big boys, they're saying we have to watch them because their growth is is going to be marginal. It's going to be stymied because of the other people in the market. So I just wanted to add that. But the biggest thing is it is undervalued right now. That's all. Good job, Carolyn.
Thank you, Ms. Sharon.
Okay, Sharon, since you have the floor, you can go ahead and do your other stock. That'll be great.
Okay, sounds good. So I'm going to talk about Western Alliance Bank. So Western Alliance Bank is currently at $91.35. And I believe today it was 90, it went down a little bit. It was $91.11. Let me get this. The thing about Western Alliance is that it offers retail banking services. It focuses on mortgages for retail customers and commercial loans. The bank's reportable segments are commercial segments, it provides commercial banking and treasury management products and services to small and middle market businesses. Thing that's very important to this, and that's probably one of the reasons why I've held on to it, is that it's a medium-sized company. The industry is banking and the sector is financial services. Now, what I wanted to say is that just like I said, um, Morningstar said that the fair value of Zoom is higher than the market right now. They are saying that Western Alliance is overvalued. I believe that I said that it was like $92.16. They're saying that the actual fair value is $87.36. If you looked, and I'm sorry, I'm in a situation that I can't pull up, I'm not on my desktop. But if you were able to look at in Yahoo and look at it in 5 years, over a 5 year period, you would have seen that in 2023, it was valued, people were buying it at $125 a share. There was a major downturn and it went down to $25 a share. So between 23 and 25, there was a rebuilding. All of 2025 was pretty much static. Right now, it is its 52-week high. The ceiling, it appears, if you looked at all of 2025, the ceiling for this stock has been $90. It'll hit that ceiling and it'll bounce back. It'll climb back, it'll hit the ceiling and bounce back. So that is what's been going on with Western Alliance. I have reviewed this for the stock club for for at least the last 3 months. I did the SSG on it. I'm not going to go through it. It's a hold. But in all honesty, if you want to hold it, I can. But my thought is it's time to just get rid of it. It is overvalued. It is if things change, we can go back and get our and buy it again. There's nothing says that we can't sell it and come back in when we have some clear signals that it is a good growth stock. I think in the last 3 years it has shown. Now I'm going to tell you, I've read a lot of articles about Western Alliance. And there were no articles that really said that there was anything negative about this bank. But when you start looking at where it is and what value, not value line, but better, but Morningstar saying that it's overvalued. I think that says something. So for this stock, I'm saying my recommendation is to sell, and um, it's not going to bring in a lot of money, but it would be close to $500 if we choose to buy stock that are good growth companies that can put us even more in the green. Are there any questions? That concludes my presentation.
Sharon, is it possible we can see the front page of the SSG? I like to look at that. Do you have one you can pull up? If not, I can
You're gonna have to
quickly. Okay,
don't uh I'm on my iPad and it's running very slowly.
okay. Let me see. Okay. Let me share. And so from here we will go with we'll take a look at that. Okay, so this is that front page that we talk about. Sharon, you want to kind of just talk about this page just a little bit? I didn't put any numbers in here.
Okay, very good. The first thing I want to make sure that you see is that the bar at the end shows that it is at the 52-week high. Okay, so that is what they're saying. If you go ahead and you get rid of, let's see, we'd like to use the last 5 years. So go ahead and get rid of, hold on, I'm sorry, I got to make this larger. 2016, 17, and 18. Strike those out for me, please. Just go up underneath the graph. Up underneath the graph, see it? And just click on each one of those. Okay, you want to do one more?
Okay, I put my microphone back on. Okay, and 18. Okay.
Very good. Now you see what happened? Changed
Mm-hmm.
a lot, right?
Yes, it did.
Okay, and that's not good.
Mm. Yes. Okay. Is there anything else we need to look at? I see the debt is not too high. They only have 1.3% of debt. Um, but Sharon, we're gonna go with your recommendation if you want to sell it. Let's see, the analyst for 2-year estimate says 9.5% for the forecast. I'm willing to go with your recommendation. Is there someone trying to come in? Sharon, did we lose you?
Yes, we lose Sharon, but I
I'm
brought her
back.
back in.
I'm
Okay,
back. Thank
good,
you so
good.
much. I had to come back in on my phone, so it's not quite as easy for me to see. But
Okay,
one of the things that I was trying to say is that one of the things that I was trying to say is that oh, we didn't mention it in the very beginning when we were talking about our principles. We
mhm,
like our tracks to be up straight and narrow, kind of like railroad tracks. And
mhm,
what you see now is that they are no longer. Once you took away those better years,
right.
and if you took out another year, they would get even more uh, out of our principle, away from our principle. Okay.
Mm-hmm, mm-hmm,
Now, so if we went with sentiments, if I just use the sentiments and put them in, and it is a hold. But that
okay.
first, let's go down and look at, yeah. So they're really good in terms of debt. They have come down a lot on their debt. but it's
Mm-hmm.
not great the other things.
Right. Oh, the return. Let me see what's that last thing there? Okay, their debt to capital ratio, it is high. It's 47%. And their return on equity isn't really all that high, but that debt is really high. Do you know what happened with it has the debt so high? Seems
Oh,
like it
no.
jumped from 21 to 22. The
Oh,
debt,
I'm sorry. I'm sorry. I must have been looking at the last thing. I can't
yes,
see on my
I was
phone.
too. I was too. It seemed like they've added a line
Yeah,
to
yeah.
this, a row, a column. I mean, a row to this. Yes. But Sharon, when we look at that debt, um, it jumped from in year 2021 to 2022, it jumped from 27% to 55%. So something apparently they bought something, acquired
Yes.
something or something. But we're going to go with your recommendation. This is a stock that you watch, and so I'm all in favor for your recommendation.
Okay, very good. Thank you for that. I mean,
Mm-hmm.
I have uh thought about this for a while,
Mm-hmm.
and just kept saying hold, hold, hold until I looked on Yahoo. When you just take a snapshot and you read the articles, nothing is that bad. But when you go to Yahoo and you look at the 5 years
Mm-hmm.
and you see that it's been totally flat, basically, for 12 months. And
Mm-hmm.
they missed for last year for the four quarters. Unlike Zoom exceeded their earnings per share for the 4 quarters. Western Alliance missed it, lost money the first 2 quarters. They came back in the last 2 quarters. But does that even out? I don't know. I'm just saying that it's Western Alliance has been sketchy. I think that even though it may be a good company, we can put our money someplace else that is a better value. My recommendation. I'm done.
Okay. Okay, if there are no other questions or comments regarding Sharon's, and we'll get to that at the end where we decide where we're gonna sell. And so let's move to we have Mia left to give her reports, and Ann if she makes it back into the meeting. Mia, you want to go ahead? Is she still with us?
Hello, Doretha. Thank you.
Hello.
Okay, I'm gonna try this today. This is
Okay.
my first time giving a report on our actual stock, so let's just go for it. So I had Electronic Art EA, um, and EA is a the type of company that it is. The ticker for it, I'm sorry, is EA. Um, the type of company that it is a entertainment. And I did some research on it, and Morningstar had some pretty interesting valuations on it when I was kind of doing some research on it, and they are considering that um, it is under. Let me make sure I say this right. Undervalued.
Why?
Um, let me confirm. Um, Yeah, so and what they're saying is that their financial strength for EA is um it's not a hold on, I'm sorry, I have notes and I just lost them. My computer went out. Okay. It just came back up. Sorry about that. Let's start over. Okay, so the current value for EA is $197 and 93 cents. I did pull an SSG on it, and I used the forecast, the sales growth rate of 4.5% just based on the recommendation. And I did go back, Sharon, per your direction here, and remove the past years on it. And it's not a pretty picture. And I'm just gonna show my screen real quick, Doretha, if you don't mind. Okay, I'm just gonna show what the chart looks like. And so this is the chart for EA right now based on this based on the forecast that we put in for it. So it looks like that, there was a growth pattern that was going on between like 22 to for 1 year. They had a good year in 2022 going into 2023, but as we can see, it looks like it's continuing to go down year over year over the last 2 years. So in reviewing this, I kind of looked around and did some further research into it because of the type of company that it is, and where we are with technology and things going on, and wanted to just kind of look at what does their revenue look like, what is their earnings per share. In their reportings, the earnings per share currently is 0.35. So after reviewing, they have a strong brand, and especially with FIFA sports and their Madden and all of those things, they definitely have a strong brand, and they have a growing like live service revenue they have now because they're doing some streaming. So I think that they're kind of restructuring what it is that they're doing, and that's why they kind of went through a slump in their growth pattern, trying to keep up with what was going on. And but they're not very profitable quarter over quarter, as we can see from the growth pattern. And they have like declining engagement just with, the as we saw on the chart, their engagement is definitely declining. So it's the in looking at it from peer to peer, what was recommended from the SSG that I did is that it be a sale. So that was the recommendation, based on all the data that we looked at. And so I'm going to go with that because what I see is the same thing. Just looking at it, I would definitely like to look further into it and have some additional guidance from the group, and any feedback that you all would offer based on anything that you saw on there as well. Like I say, this is my first time actually that reviewing one of our stocks. So I'm not sure who was doing EA before, but would just really like to see, you know, what um, what you're seeing based on the information that I've reported versus what you've seen over time in reporting this stock.
Okay, Mia, great job. This is what I will say is that um, for the first quarter of 2026, they did not meet their earnings per share was low. So they did not meet their goal. However, for the past couple of quarters, they met. It was met. So something happened between the end of the year and meeting the goal for this year. Something happened, but I didn't go into detail, but it always said that it's a strong company because, again, of the service that it provides. And as you mentioned once, that it have the FIFA that will be taking place this year. So definitely that will help boost whatever have been going on in that short period of time, because quarter by quarter it was fine, but there's something happened on the last quarter. So we just have to look into it to see what really actually happened in that last quarter.
Thank you so much for that, Carolyn. So based on that, I will say that we hold and do some additional research on the what was going on. Sharon, you're talking, but we can't hear you. I see you giving some really good information.
I'm going to ask you about Morningstar. You are a Morningstar person, so do you? Morningstar gives very good analysis on companies. Were you able to go into Morningstar to see what they're if they follow them, first of all, and then second of all to see if you scroll down to the very bottom, there's a usually very good write-up. It's very similar to how Value Line does it. It's just that sometimes they go into a little bit more in depth.
Yep, give me 1 second. Let me go back here. My apologies, trying to get back in.
So Sharon, while she's doing that, let me just ask you a question, and perhaps you can explain this to me. When we look at PEs, a high PE, I'm looking at the sentiments from members of BI on the SSG. And so for a high PE, they have 45. And for a low PE, they have 40. So help me with that.
Let me tell you something. So on the SSG, you see on the left where it says AI, we're going into the new modern age. If you hit that button where it says AI, you can ask it what are the rules um, concerning just about any regulation. Do you see what I'm talking about?
Awesome. I do. And I'm going to do that after our meeting tonight. I'm going to do that. I'll do just that.
Where
I
is that
saw,
again, Sharon? Show
Okay,
us
when
again,
you
yes.
please.
go on the first page of the SSG over on the left,
Hmm.
there is a little thing that says AI. And you know how they have in the education section that sheet that tells you what are all the good rules for
With the
knowing
chat box.
what
Chat box.
are you on the first page?
Yes,
That's
when I
what it
hover
shows me
over it, it
saying.
says chat box.
Oh, I thought it just
Mhm.
says AI.
Right,
It
when I
has
hover
AI as the
over it.
image. Yeah,
Okay,
you're right,
okay.
Miss Ian. When you click on it, it says AI support chatbot as well.
Okay, yes. But on and all you have to do is just ask for whatever guideline that you want and it tells you what the guideline. You remember we used to have to go and look in all of the papers and find it. I mean, we used to have to anyway, I'm just saying you don't have to do that anymore. You just put it in there and it tells you what you want to know. It's awesome. I did that on Education Tuesday about 6 months ago. First time I saw it. Did I put myself on mute again?
No, we can hear you. That's why we're here. The rest of us are on mute.
Okay, Sharon, and I heard you mention cheat sheet. So the SSG guide has a guideline for beginners, and Mia, this could be something that you do. And when I first started out, I found that a guideline over in the resources, and I made a copy of it, and I keep it close by whenever I'm in an investment club meeting. And one of the things they say about the PEs, no more than 30. Keep those
That's right.
PEs no more than 30. So those high PEs for this particular company is a little concerning. So yeah,
The only
good.
other thing that I can say about that is that I heard Mia say she compared it against other companies that are in the same sector, comparable companies. So sometimes there are companies that have unique PEs, unique debt to ratios. So, I mean, it's just, you just have to look at it. But because sometimes, and I've heard this from other clubs, R30 is pretty restrictive, but it's a good guide. That's what we follow. And you came back just in time. Mia,
Before
did you?
before Miss Anstad, I wanted to add something. Mia, so I did went on Value Line and I looked at the AE. What they're trying to do is to merge. A merger is in the process. And the Saudi Arabia wants to buy it. And
That's I saw
if
something
it
about
went
Saudi
through,
Arabia.
yeah, if it goes through, it will no longer be a private, will no longer be a public company. So that's
Mm,
could be the issue.
Interesting.
Hmm. All right, so I'll go back
yes,
on
that
mute
makes
now.
a lot of sense. Thank you so much, Carolyn.
You're welcome.
That was interesting. So we have this will be what, the second or the third time that we've lost uh, some of our company due to a buyout. So far, it's always worked to our benefit. I'll be quiet,
Yes, but this one in particular may not because it's going private.
but they'll have to
Mm,
pay us for our shares.
Yes, the said is that actually the spoke about the shareholders like $210 in, per share or something like that they were looking at. So if it go through.
Okay, awesome.
so that aligns with what Morningstar had valued these shares at. Because I think they were at 200 when I did this report initially, and I think now it's the closing price today was 196.84. So um okay. All right, so I pulled up the Morningstar reporting, and Sharon, you were asking a particular question in regards to EA from the Morningstar report.
All I'm saying is that that's another, Morningstar gives a really good analysis on the condition, and they usually give you background information on exactly what Carolyn just gave us. It's just, usually for me it's a good read.
Gotcha. Okay. Yeah, it is it was a detailed reporting of it, and I did see something in there about the Saudi um potential um purchase or acquisition. So it says that it's presenting a good win for the shareholders based on this acquisition. So I guess it's something that I definitely want to do some additional monitoring and watching over this to just get more exposure to it and understand more of what's happening with the stock itself, especially now. I'm getting much more intrigued with the things that I'm learning about the stocks that we have versus just watching from a high level overview of performance on something that we don't have. So excited about this.
Okay, awesome.
Okay. The other one that I had was Millrose Property. And I, MRP is the ticker for it. And so I would like to ask. So I had I put it in to do an SSG on it, and I was not able to pull any information. Like it's coming up and it's like giving me errors and trying to pull it up. The historical data, when I do the analyze growth quality, it's giving 2 years worth of historical data. There are no recommendations for the forecasting on it, and it's starting at a pretty. It shows our current price on it is like $30.43 per share, and we own 5 shares of that. But is anyone else logged in right now to Better Investing so that I can see if it's something that I'm doing wrong? Because this is the first time that I've seen one come up like this. Doretha, are you able to
Okay,
look at
I
it?
can. But I was going to ask Carolyn to chime in. I think this may have been a stock that she had previously, and she might can give us some. And I think we recently bought it,
No, we
so
didn't buy it. We inherited it.
inherited. Okay, that's a word.
Okay.
Yeah, so that may be. I think. Yeah, you. Let me share this. Can you see that? Let me.
No, we see the agenda still.
Okay, let me stop sharing and share again.
Are you
Yeah, this,
sharing the stock from the spin-off that we got? It
yes,
does
that,
not show,
Okay,
it does
this is
not
what
have a
I
good
see.
picture on SSG. That's why I never show it on SSG because it's new. And you would
mhm,
not it if you look at the SSG, you will say, no, I'm not investing in that at all.
Yes.
right,
And that's
So
why I was asking.
yeah.
yeah.
So yeah.
And so they must be a fairly new company. They only have 2 years and then
Hmm.
2025, 3 years of data, just as you said, Mia. So we wouldn't get a true accurate picture of this company. We just have to continue to watch it and every month see how things are going with it, because we own it, we own shares of it, and the bet just to keep an eye on it every month and see how they fare. That would be my recommendation. Anybody else has comments on this? I don't. You can, let me see, valuation return, very little
I mean, that's the
information.
same thing I did. I was like, am I
Hmm.
missing something here?
No, no, you're not.
The
They don't
sentiment
even have
I
any.
did.
Yeah, they don't
Yeah.
even have any sentiments on it.
Mm-mm.
So
Yeah, you would
yeah,
not find anything,
great. Yeah.
What's the ticker
Dorita.
again? What's the ticker?
The ticker is
MRP.
yes.
Uh-huh.
MRP. Have you
P.
gone to Yahoo Finance or looked
Mm-hmm.
at it on Value Line?
Yeah, I did that before, but what the main Melrose is just to purchase land and develop it. And in
Mm.
addition to that, to help other people with finances is like a finance, like linear build
Hmm.
and mill they finance. So they will buy the land and finance the billing of the property. So basically that's what they do.
Yeah, because it shows like I did some research on it and it shows that it was spun off of Lennar
Yes,
Corporation last
yes,
year.
yes, and
So
that's when we got it.
yeah, and it was receiving it was like a large land portfolio that it received.
That's correct.
And it was just a lot of cash at the time of the spinoff. So that's how it kind of took um took form.
Yeah.
That's correct.
And
Yeah.
okay, got it.
And we did have a choice to keep the 5 shares, I think it was, or to sell it. Is that right, Sharon?
Yes.
Uh-huh. Yeah. So we decided to keep the shares. And so, like I say, we'll just see how this plays out over the next few months.
This is what I will say. When we got it, it was at
Mm.
$11.68. Now I think it might be in the 30s.
Yeah,
Yep,
it
So
it's
has
like
Mm-hmm.
done
30. Yeah,
very
it's
well.
definitely growing.
Wow.
Absolutely.
Mm-hmm.
Yeah. I mean, the only thing that we could do, I kind of hate that we've lost a lot of valuation. So I don't know that there's any other kind of analysis that we could do to determine, should we buy a few more shares? I mean, it's gone from $11 from when we got it to $30,
Mhm.
and we missed it. But we did what we were supposed to do. Just saying.
Yeah, and I mean it does have like a unique business model, the way it's set up, how it uses it's like a proprietary home sites that they use versus, the traditional land that's being used for their clients. So I thought that was pretty interesting about them as a company as well, to not being able to see. I think that it's definitely as Ms. Ann would say, a niche.
Mhm.
It's not a lot of comparison data to go off of, and it's like it's not like it's a trust company, but it's like not like a traditional trust company. So that's what made it so interesting to me. I was like, this is interesting. Um, so they don't like I did check Morningstar for it, and they didn't have a grade to they didn't have a grade for it. They, mainly talked about their business model rather than giving them a grade. So that's what made it interesting to me. So when I saw there was no SSG information, I'm like, am I doing something wrong here? I'm gonna ask the question. But it does have, adequate liquidity in their balance sheet, even though it has a limited history. To your point, the cost of the stock is definitely rising year over year.
The target, I'm looking at Yahoo on it right now. They're saying that the 1 year target estimate is $38.60. And it's got a really good dividend.
Okay.
Okay, are there any questions or comments? Any other questions or comments for Mia regarding her stock? Mia, you did an excellent job for a first time.
Thank
Good
you.
job.
Yes, that was
Yes,
going to be my comment. Good job.
yes, good job.
Thank you.
Hmm.
Okay,
Okay,
Annie's
if
back with us.
yes, I heard her voice. And
Yeah, I'm here. No, I'm back.
hmm
Oh, thank
hmm
you for your patience. All right. So, Sarita,
Yes, ma'am.
yeah, if you could allow me to share,
Sure.
stop sharing for a second. I'll
Hmm.
put it up. My first one here is Axos. I'll start with that. That was on, I think was on the watch list maybe from the list you gave me.
Yes.
Okay. All right. I'm going to pull that up and share the, the SSG on that. And let me know if you can see this. For those who are listening and may have come on late, this is the Nabwic National Association of Black Women in Construction Investment Club month meeting, and we're just going over our stock portfolio. Our education will be the following Tuesday, but we are going over our stock studies. And Sharon Jackson, our president, gave an introduction in the beginning of this. And I'm just making a statement because people are listening in on YouTube and will be listening in the future. We want to make sure we continue to say that this is for educational purposes only. We're not suggesting or selling any stock or proposing that we buy anything, that we are recommending for our club to buy, sell, or hold. And this is just for education purposes only. And we are part of Better Investment as Investment Club, Nabwic Investment Club. Okay, so the stock that I was given is this. Can you see it okay on the screen? And I apologize for the noise. I'm actually on a cruise ship and I'm outside, so it's not a lot of noise.
Yes, we can see
Can
your
you hear me
screen.
okay?
Yes,
Okay,
we
and you
can.
can hear me okay. All right, very
Mhm.
good. Thank you. All right, so this company is called Axos, and it's on our watch list, right? Hello?
Correct. Correct.
Yeah, I got to turn my volume up. Hearing. Okay, so we've been watching this stock, and this SSG that I updated, just a little bit about the company. Uh, right now, this company is a medium-sized company in the financial services. The industry is banks, which is regional. The last fiscal year ended will end June 2020. Excuse me, June 2025. That's the fiscal year. The current price of the stock as of the 4th of February 2026 is $99.76. Axos is a financial financial Inc. It is a bank holding company that operates through its bank subsidiary, uh, BOFL Federal Bank, a nationwide bank that provides financing for single and multifamily residential property, small to medium-sized businesses in certain sectors, and collecting specialty finance receivables. Its operating segments are banking business segment and securities business segment. The bank distributed its products through a wide range of retail distribution channels, including only bank brands, affinity groups, and sales teams. I'll stop there. Now, so when we look at this, it is traditionally an up straight and parallel. Now, as we can see, the historical sales, I just gave a projection. And this again, even though we do this every month, we are well aware that quarterly data is not available every single month. So I just want to make sure we're aware of that. So as we keep talking about these companies and what's happening, it's really the quarterly data that we really want to make sure we're tracking just about every month. So I use the numbers from the sentiment just as a projected numbers. When we look at the pre-tax profit on sales, is an average 5-year average is at about 50.7. The return on equity is about 16.6%. The debt to capital is 20.3%, and the return on average assets is 1.72. Now, go back to historical sales. The growth of this has been at about 15.6% for historical sales. Historical EPS has been averaging at about 17.8. Pre-tax profit has been averaging at about 13.8, and historical total assets at about 14.7. We go to the back side of this stock. Interestingly, when I go down to the evaluation and risk at a glance, it says that this stock, if we were holding this stock, it would be a sell. So I went to Morningstar, and I also went to chat to look at, going back to Sharon's point about Morningstar, to look at CBRE, Exos. Let's see, I don't know if I have that one. Let me just give you, I think I did do that one. Okay, here we go, Axos. And these are just highlights from Seeking Alpha. It says that this stock has a respectful downgrade after an excellent from a buy to a hold. And I just pulled up some of these high level articles and trying to understand why would, if we were holding the stock, why would it now be a sell versus a hold or buy? And then this one here says from investing.com in Australia says, and of course that's international, says, and this was just 6 days ago, Axos Financial saw 5 positive EPS revisions and 1 negative EPS revision in the last 90 days. Okay, let me go down to market beat. Basically, everything that I just kind of a peripheral view from the articles has the financials that are being reported are not good in terms of these uh, these returns. Go back to this article here. Downgrade. All right, so even though they had a respectful downgrade after X, you can see it says that Axos Financial is downgraded from battle after 92.5% stock rally since 2023, outpacing the S&P 500. Axos asset quality and return metrics remain strong, but valuation multiples PE 12, and I'm not sure what PB is to exceeded preferred thresholds for the sector. This deposit growth is robust, but increasingly reliant on costlier brokered deposits. Again, with this being recommended from the SSG, that if we were holding this, that we should sell it, I would just suggest we just continue to look at it. That would be my recommendation, not to consider going any further, to consider buying the stock as a whole, as something that's on our watch list. Any questions or comments? Oh, I forgot the other one. Another study. Any questions or comments? Study. Any questions or comments?
No, good job, Ann. Good job.
Yeah, just as an aside too, I did do a chat research. And one of the things that ChatGPT said about the historical earnings are weak, and they're on the decline. Axos reported earnings and revenue that were flat or weaker year over year. Net income, diluted EPS declined compared to the prior year period. That's year over year. This indicates periods where growth slowed versus prior cycles rather than consistently accelerating. And when it comes to margins, recent earnings commentary highlighted pressure on net interest margins, with yields lower in some loan categories and competition in lending pricing that could squeeze future earnings. And then it went on to expense increases and charges, credit loss provisions, and risk stock reaction despite positive results. There have been instances with Axos beat earnings, but the stock still fell after the release, suggesting investors may be wary of underlying trends such as slower net income growth competition. So there's some other things. I don't need to go into all of those, but those are just some research that was done on it. So we go now to CBRE. This is the graph for CBRE from the SSG. Historical sales has this is an average percent growth is 14%. I did a forecast of 5.6, hit the low side, the sentiment. Historical EPS is 9.6. And I did a forecast of 11.6. Pre-tax profit average has been at 5.4%. Okay, and to evaluate management, percentage of pre-tax profit on sales has been at averaging at a 5.1%, and return on equity 14.8. Debt to capital is 35.6. But let me go back to the top because I don't want to assume that we know that this company description is CBRE is a group that provides a wide range of real estate services to owners, occupants, and investors worldwide, including leasing, property and project management, and capital market advisory. CBRE investment. Investment management arm manages over $140 billion for clients across diverse public and private real estate strategies. And I think this was one of the companies, I know for us being in the construction business at MCO Construction, we looked at this years ago, and I didn't really see anything that connects it, but I just think in my gut that because a lot of people a lot of companies have given up leasing space. CBRE is one of those companies. Sometimes we find them in a REIT, right? Real estate investment trust, where oftentimes when you look at a bank, and we learned this the hard way, but we would go to the bank building to see if we could do the construction or renovations and all of that. Come to find out the bank did not own the building. CBRE and companies like CBRE own the building. Now, with that thought in mind, when you look at, Morningstar gave this financial health rate of 8, but just from history of being in this business, we know that a lot of companies like this have had a really bad hit as relates to COVID, because a lot of people never went back to their offices. And then when it came time to update their leases, a lot of companies didn't, because they found they needed to either downgrade space or let that space go altogether. And that's one of the big businesses. I'm sorry, go ahead, Doretha.
I'm so sorry.
Oh,
I'm sorry.
what are you saying?
I'm so sorry.
Oh,
No,
okay,
I'm
no
so
problem.
sorry. Go ahead, Ann.
Okay, no problem. All right, so anyway, looking on the backside of this stock, high price for the next 5 years is projected at 173. Selected low prices at 50. And again, the SSG is suggesting to us that we should sell this stock if we own it, and we do own it. Now, to go to the article, I did pull up Morningstar, just highlights on Morningstar, CBS, Morningstar, CBRE. CBRE, significant EPS downgrades as of mid-January 2026, and this is from Sharon's favorite Morningstar. CBRE group has faced significant negative earnings per share revisions, with some reports assigning an F grade to these revisions. This indicates decreasing profitability expectations in the near term. High valuation concerns. Morningstar and other analysts have pointed out that the stock appears overvalued. Technological disintermediation risk, economic uncertainty, insider selling, and institutional caution. I'll call it a chat check on this company also. And even though it was one of my favorites, it goes on to talk about the fact that the analysts are cutting EPS. Several analysts has revised earnings per share expectations downgraded ahead of earnings season, which reflects lower future profitability forecasts for CBRE. This kind of revision can weigh on stock sentiment and investor confidence. Weakness in certain commercial real estate segments. CBRE's advisory services and property transaction revenue, which are tied to market transaction activity, have been uneven due to broader commercial real estate headwinds, capital markets tightening, and slower deal closings can dampen future revenue. Decline in free cash flow, and this is huge. There's no moat, if you will, if it's a decline in free cash flow. Anyway, in its Q2 2025 results, CBRE reported a sharp drop in free cash flow that quarter, falling to just $2 million from such higher levels in the prior year. While trailing 12-month cash flow remains strong, quarterly free cash flow weakness can generate concern around operational cash generation. Stock price volatility around earnings. Even when CBRE beat EPS estimates in Q3 2025, the stock experienced a slight dip in price around the earnings release, suggesting that sometimes the earnings beats haven't always led to strong immediate stock rallies. Headwinds from broader CBRE market conditions, commercial real estate fundamentals such as tightened credit markets, slower investment activity, and even, here we go, law office leasing demand, and that's the point I was making earlier, can indirectly pressure CBRE's earning growth in advisory and transactional businesses. I'll stop there. I'll stop there in the data for CBRE that is go back to CBRE SSG. So again, it is suggesting that we should consider possibly selling this stock, and we do hold it.
Is that your recommendation?
Well, I would tell you, I would wait until the quarterly earnings come out, because again, that's my point I was making about the data. We do these updates every month, and really it is a quarter update that the earnings reports come out on a quarterly basis. So we have the end of the quarter for December. I would say wait until next month.
So they just had a quarterly report a month ago, 30 days ago.
Okay. In that case, then I would say wait till next month. I'm sorry, next month is March. It would actually end up being 2 months, because the quarterly data for the first quarter would not be in March, it would actually be in April. So it's out in 30 days. But I don't know. I don't think that just looking at the projection. Go ahead.
Yeah, I was going to say, I tend to agree with Ann. With Amazon, even though their quarter ended and 30 days passed, they just had their meeting, their conference call today. So I didn't see their annual report. So perhaps waiting another month would be ideal, until we can see the report.
And also the fallout. What once the earnings are public, that's when some institutions really begin to look at dig deeper into this, because again, the SSG tells us based upon the data, and there's a lot of other research, and that's why the sentiment, right? I go back to the sentiment. That's why the sentiments of the other members of Better Investing, and for those who are listening to us as we're discussing this, we're members of the Better Investing organization, which is a nonprofit organization for education, teaches us how to analyze stocks and how to invest, and so this data, as you can see from what I'm sharing on the screen, is compiled a lot of data from previous clubs that report their analysis of these stocks. And so even though we all do our own due diligence, it's good to look at historical data from other clubs. And this data, it says that this is total completed studies in the last 90 days. It's been 17 studies in the last 90 days. But then there are studies that have been done for years, not just 90 days, I mean, for years on these different stocks that we are looking at. So when we look at the average mean versus the median of what the other clubs are saying in their projections, and then we determine what we want to use. This is like the same thing when you go to Morningstar, you go to Yahoo, or you go to any of these other resources that are out here to give you data. We have to do our own projections and forecast in terms of what we think. So I would suggest, to answer the question, Sharon, for this particular stock, I would suggest that we wait until next month and see what's the fallout from the decline in the data. But again, going back to the SSG, they're looking like they're attempting to rebound.
Right.
But again, pardon me?
No, I was saying it looks like the quarters indicate that they may turn the corner.
Yeah, but I mean that's what I'm saying. Even though the SSG says sell, I think we could just give it another go. Yeah, those would be my thoughts. People are coming back to their offices, and there's going to always be uh, negative like positive data. But again, when we look at the numbers, we can lie on the numbers don't lie. So as we look at historical data, which is why it's good to have history, there's a couple of outliers on here, but if you take out the outliers, it's not that bad. But anyway, those are just my thoughts for that. Now, any other questions before I go to the last one? And I know our time has been very well invested, and it's been almost a couple of hours. We did uh, the last one, CVS. And even though most of us may know what CVS is current price of CVS right now is $75.24 as of the 4th of February. Last fiscal year ended based upon this data, and even though I updated it, was 12/24. I don't have and I did update the data. Let me do it again. Refresh data. Refresh data. Okay, the data's refresh data. Okay. All right. Anyway, it doesn't look like it is. How should it happen? Okay. All right, CVS, sorry about that. CVS offers a diverse set of healthcare device services. Its roots are in its real retail pharmacy operations, where it operates over 9,000 stores, primarily in the US. CVS is also a large pharmacy benefit manager acquired through Caremark, processing about 2 billion adjusted claims annually. It operates a top-tier health insurer acquired through Aetna, through which it serves about 27 million medical members. The acquisition of Oak Street Health added primary care services to the mix, which could have significant synergies with all existing business lines. Now, this does not look that good on the other hand. But again, I'm going to do this again, refresh data, because I did update this and it doesn't look like it's updated unless that data is not changed. But anyway, so the projected historical sales average is at 10% average, and I forecasted a 3.9%. Historical EPS is averaging at about 14 growth percent. I took a downgrade of 11.9 based upon sentiments. Pre-tax profit is at 1.8%. Now, the evaluation of the management, percentage of pre-tax profit on sales is at 2.7. Return on equity is at 8%, 8.8, and percentage debt to capital is at 1.7%. Our evaluation on the bank side of this, and as you can see from the right-hand side, it's already selling a thing to sell stock. 5-year average price earnings ratio is 17.4, and current price earnings ratio is price is 198. Current price earnings ratio 98. Okay, so high price forecast yes, at 10 point, projected at 10.9. Yeah, these numbers don't look right. I may have to pass on this because I adjusted these numbers, but they don't look right. I'm going to just read what it says here. Selected forecast low prices 41.2, and it is in the sale zone. I will go to Morningstar. I think I did a Morningstar article on CVS. Yes. Okay. CVS significant stock drops as of late of 2026 January. CVS shares express a steep decline, nearly 11% in a single day, on track for their largest percent decrease since May 2024. Medicare Advantage headwinds, primary driver for recent negativity is Centers for Medicare and Medicaid Services proposing a lower than expected payment rate. Poor star rating, CVS was hit harder than some peers regarding Medicare Advantage star ratings, which is expected to cut into membership enrollment growth and bonus payments in the near term. Segment losses reports from late 2025 indicated that CVS booked a $5.7 billion loss in its health services business, despite strong performance elsewhere. Regulatory and PBM scrutiny concerns persist regarding regulatory headwinds for its primary benefits manager business, particularly around transparency and spread-based pricing, which could affect the near-term outlook. Long-term performance issues following a 40% drop in 2024, the stock struggled with high medical costs and the need to turn around its retail pharmacy and businesses. I could go on, but I don't think need to. I think that I'll end up with the SSG. So now the recommendation here is a sell. We do want to stop sell it. So Sharon,
Yes, ma'am.
your normal question is, what do I think?
So we're selling. That's right. We're selling.
Yeah,
I said sell
yeah,
that 2 years ago.
yeah.
But the only thing that I can say, Ann, and this is something that you'd said when I was screaming sell, sell, sell. They last year they exceeded the market in earnings per share for every quarter. Their quarter earnings is going to come up, I guess, on Monday. When is the 10th? Monday or Tuesday? So yeah, I agree. I think that we should sell it. I think we should have sold it a long time ago. But there's nothing that precludes us from buying it again.
Yeah, so I make a motion we sell this stock,
Okay.
sell this company. Yeah.
So far we have 2 recommendations to sell.
Wait, you got to take I have a motion and take a second and vote.
Well, so we're not voting, you're recommending, and then when we finish all, and I'm assuming that we have finished all of the presentations, we are going to go ahead and we'll take up the recommendations, and we'll take formal recommendations, formal seconds, and then we'll vote. Right
Okay.
now, everyone has recommended just holding. Ann and I were the only 2 that proposed selling. I propose that we sell 5 shares of Western Alliance. Do we have a recommendation for that? Do we have a
And
vote?
McNeil, I motion we sell the 5 shares.
Awesome. Do we have a second?
Aretha Dennis, I second.
Okay, awesome. Is there any discussion on the selling our 5 shares of Western Alliance? How great is that? No discussion, so let's go ahead and take the vote. Everyone in favor of selling, say aye. Aye.
Aye.
Okay, awesome. Now, so we are selling Western Alliance. How great is that? That sounded unanimous. Now the next vote is to sell our 21 shares of CVS. Do we have a motion?
And make me a motion that we sell all of CVS.
Okay, all of it. All righty then. Do we have a second to Ann's motion? Do we have a second? Can you hear me? Do we have a second to Ann's motion to sell all of CVS?
They don't want to sell it because they shop at CVS.
Okay, so the recommendation dies for lack of a second. Does anyone have? I'm sorry. Does anyone have an alternate motion? Okay, I guess we're going to keep it. So right now, the only thing that we have on the table is to sell Western Alliance. It appears as if the recommendation to sell CBS has died. I didn't hear a second, and there was no discussion, and neither was there an alternate motion put on the table. So that is that.
Is there an alternate kind of vote? There was no second, so there is no other voting part of it. Okay.
Correct.
I just I am just not sure right now about selling all of it.
So you can make an alternate motion. How many shares do we have? We have 21 shares. You can make a motion that we sell
I can
10.
make a motion that we sell 10 shares of CVS.
Okay. Now
I'll
there is a
second that. I'll
okay.
second that one.
Okay.
Okay. So we have a motion and we have a second. Is there any discussion on selling 10 shares of CVS? Hearing no discussion, let's go ahead and vote. All in favor of sharing 10 shares of CVS, just say aye, please.
Aye.
Aye.
Aye. Aye.
Waiting on Mia and Carolyn. Is that
I
an aye?
answered. I said, I.
Oh my, that was funny, Carolyn.
I dragged my eye because when we had our last meeting, we said at the end of the quarter, we will review it again, and then we'll make a solid decision on what we will do with CVS.
Okay, so you're a no.
This is the end of
No,
the quarter.
I said,
Aye.
but no, this is not the quarter, Miss Ann. This is only the first, this is January, not the quarter.
Carolyn, the last quarter was last month.
Miss Ann, that's not what we said. We said the quarter. That means in March is the quarter.
That's the new quarter coming up.
Right.
Yes. I did not deny. I said I, but I just
Oh,
putting it back
Yeah.
on the table to say that's what the decision that we made. So bringing it up again, I stayed silent. But yes, I will send 10 shares and not all of it.
okay, very good. Waiting on Mia.
That was a
Aye.
majority.
Okay, very good. Okay, very good. So we're going to sell 10 of the 21 shares. All right, so that means we're going to have money next month to buy something. Okay, all righty then. So that concludes the vote and all of the recommendations. All of the Since Nicole is not here, nor is our Valencia here, we will wait on them to present next month. Nicole was going to do an SSG for us. Has not come. Hopefully, she is well. And we will put that back on the burner for next month so we can move on to old business. On the agenda, we know that we need to update the partnership agreement. We Nicole has been talking about this for a while. We have new members and we have things that need to be done with their signature. Um, so we need to go back and look at that partnership agreement, and we're going to have to take care of that. And it says update documents. So for new business, it has basically our taxes, the K1 and the Nabwic taxes. Carolyn, do you want to say anything towards this?
No, all I can say is that we're still waiting on the 1099
Okay.
R 1099. No. The last discussion we had is that Miss Anne would have reached out to Mr. Moore because she wanted to reduce the price so we can use some of the money for, I guess, the event and for BI event. So we never concluded, we never got a final response before Miss Anne left, so I don't know the status on that. And that's
So,
where we at with
Yeah,
that.
I can put that on my list for tomorrow. I can reach out to him tomorrow in
so
regards to that.
it's tax time. Do we really want to do that now?
Well, it's tax time. We have to do it now because we need him to do our taxes.
Right. Right. Okay. All right.
Yeah.
All right. Sounds good. So we'll find out what happens. Maybe at our uh, maybe not at the education meeting, because but at our new open executive meetings. And so the next thing on the agenda is we had a
Madam
time,
President,
ma'am.
can I ask a question?
You can
Do we
always
have
ask.
any alternatives to get our taxes done?
Okay. Now you're our money lady. I don't know. When you say alternatives, if
Well, the only other alternative, Better Investing does have a software that it uses for accounting, and they have a process that they use all the clubs to do their, like I know our chapter club, I think we have 20 some odd members in our South Florida club. Karen, you're in that club. I'm in that club. Valencia's in that club. And our taxes are done utilizing the Better Investing software. So we could check, or I don't have a problem in checking some of the other clubs to see how they do, what do they do. Because it's only 6 of us, I think, 6 or 7 of us, something like that, compared to 20 or 30 people in the club. And they use the Better Investing software to do their taxes and the
right,
K1 stuff. So
the bigger question is who's going to do it.
no, we find out. Let's find out who does it for
Okay.
them.
Okay.
Yeah,
Sounds good.
yeah, yeah.
Sounds good.
Because we
I
have to
can.
keep in mind that we had members withdraw, so that's something that we need to take into consideration when we're doing the taxes or what needs to be done. I don't know anything about those type of taxes, so I could only ask questions. So that's it.
Understood. Yeah, understood. Appreciate that. Yeah, I can. I'll commit between now and the time we meet on Tuesday. You have some kind of update. You write that down. Thank you.
Okay. Anything else on the taxes?
No, that's it for me. Thank you.
Awesome. Thank you. Now, on to save the date. Well, actually, this time last week, we were in the midst of the Nabwic annual convention. What a time we had. Preparing for our video that we did. Then on Friday afternoon, we did a Zoom with a larger group. And so we participated in a way that we have not normally participated in the NABWIC annual convention. So one of the things that we said that we were going to do, Carolyn has already said that there is a mid-year NABWIC. So we need to start talking about how we're going to participate in the mid-year NABWIC meeting. So anyway, I'm just saying that it was a good time. It was very trying, but it was a good time, and I think that as we do it, we will get better, and Nabwic will, I think we'll better understand who we are, and we will have better participation for the larger group wanting to be members. I just thought it was great. I have to tip my hat for Mia with everything that she did. She really pushed us over the goal line in getting this done. Um, Doretha went to sleep on us and left me and myself to finish the project ourselves, trying to finish that video. So anyway, Doretha is a warrior. So I have nothing but big bravos to both of you, all of you, really. Now, the next thing is the Better Investing National Convention. I know this is like on the backs of everything that you do with NABWIC, but this is on the agenda. April 23rd through the 26th is the Better Investing National Convention. It's going to be in Chicago. And I've already taken time off from the VA to go there. I will ride the train from Alton to Chicago to be there. And so it is that weekend, and it's a good time to get educated. It truly is. I think the thing that is so important about being at this meeting is that everything says that this is going to be a rocky year. Everything is changing. A lot of things are changing. This is the time that we need to be educated on how to ride that wave. So anyway, I'm just saying. Um, I'm not sure how many will be going, but we'll bring it up and we'll continue to bring it up until hopefully we get a good number of showing. Now,
Sharon, Mia has a hand raised.
I couldn't see it. Go ahead, Mia.
Yes, thank you, Miss Ann. Thank you, Sharon. So I just wanted to kind of share in regards to the feedback in the room from our presentation. As a whole, the group was very excited to hear about the investment club and our presenting at the annual meeting. There was a lot of feedback. There were a lot of questions. We did have a lot of interest. To Miss Ann's point, I think that one of the things that we may want to do is go ahead and start spreading the word again, because there were several NABWIC members that were interested in, learning more about the investment club, wanting to get involved. So I think if we start pushing that information out, I know that I had sent a flyer inside of our WhatsApp when Miss Ann said if we could come up with a quick flyer. But I think probably about 4 or 5 people inside of the room came up and were interested in learning more about being a part of the investment club, and just wanting to be a part of the group, and learning more about the group. They were very intrigued at the fact that we do have the educational part of it, and the how you broke it down on the video share. And it was very easy to follow, and for them to understand how it's for everyone. It's not for a seasoned investor. It's for people at all stages in the investment process, and getting an opportunity to see that we work together. And I think even after today, with doing our presentations today and going through the stock, like, this is just more confirmation of the fact of what we're here doing. So I think that it's a really good opportunity for us to do what we're saying and welcome more people in, and get them in, because I literally just got a call and they're like, "You're still on the investment call?" I'm like, "Yep." And they're like, "I gotta join the next time. When's the next meeting?" So it's a good sign, because we hear about the investment club all the time. But I think, just being a part of it really kind of pulled everything together for the organization and for the club, so that we could, like we said, create that camaraderie in order for us to, attract more people and talk about it to others, because it was people talking about, "Oh, I need to tell my friend about this so that they can, know that we have this option inside of Nabwic." And, and just, the both both sides of the organization and the club attracting people to one another. So that was just some feedback that I got, and I wanted to share with the group tonight to just give some insight on that.
That was
Thank
very
you.
positive. Thank you.
Yes.
We
And thank
really
you, Mia,
appreciate
for sharing that. And so that I want to just piggyback on what you said. There is a marketing meeting right before this meeting, and a gentleman in that meeting invited us and suggested to um who was the lady that was handling the meeting, that the
Jackie,
Nabwic and who is it?
Jackie Perry.
Jackie's. Yes,
Mhm.
Jackie Perry. She invited us to come to her marketing meeting and to share what the investment club does. The gentleman mentioned that, Gerald, I think his name, and I said I will pass this information on to our president and vice president, and I'm quite sure they will accept to come on and do a quick presentation at the marketing meeting.
No,
So,
podcast.
I was
Yeah,
gonna
podcast.
say a podcast would be
Oh, the
great.
podcast. Oh, Sharon, there you
Mhm.
go. The podcast. Awesome.
Oh,
So
she got
yeah,
practice now, Doretha.
check. I know, right?
She ready now. You camera ready now, Sharon.
Hmm.
it.
Yes. So yeah, there are lots of opportunities coming in the future for us to present the Nabwic Investment Club to those who are interested. Yeah, I just wanted to share
And
that.
I also think that, along with that, like Miss Ann was saying about the podcast, that's also an opportunity, even with the education side of it, because we're a part of the education committee for NABWIC and we have, educational sessions all the time. So if we even utilize one of those sessions, because I think we do 2 or 3 per month. And we always have, 20, 30 people that are interested in the topics that are being brought up. And just the whole idea of investing in learning about the process, I think would be a huge opportunity for us to expand our audience, since it's something that is, it already has a captured audience through the education committee, but being able to utilize that arm of it as well as the being podcast would be a huge opportunity.
I could add one more thing to that. On Fridays, every Friday we have a call, and now we call, and it said if there is any announcement, and you could always make an announcement when is our next meeting on that. So there's several ways that we can advertise ourselves and bring it to the forefront.
Yes, and Carolyn, to add to that, we did also talk about adding it to the BDLs. So what we can do is, for Thursday, I can work on a flyer, or not even a flyer, but actually a part of the slide deck, because I do the membership slide deck that we put in the billion dollar luncheons, and we have announcements in it. So maybe we put something in there too to, advertise for the investment club and give people information about that, because we have a QR code on there for people to join in to come to the next membership meetings. It's another opportunity. We talk about the education committee. Let's add the investment club into that mix as well.
Agree, and we have Sharon smiling from ear to ear. Go ahead, Sharon.
The meeting's almost over, and I'm trying to get off this camera, and I'm trying to do it without having my fingers all in the camera. So that's why I'm smiling. In all honesty, I'm smiling also because of the excitement that of this conversation. It is we always say that we are an educational group, and we are an educational group. But the whole point is not only just to be educational, but to open our arms. I mean, Anne explained it, last year. This was designed originally for NABWIC people. And as it turned out, non-NABWIC person became the majority of the organization. So now we are turning the corner to becoming what we were designed to be. So I think it's great. Okay, now, if there is nothing else, I got to make sure that we know next Tuesday morning is Education Tuesday. So it again, that's not just for us, that's for anyone in Nabwic or anyone that wants to come to listen. So that is February the 10th, 2026. It's second Tuesday of every month. We will have a great agenda. And we say executive meeting, but I guess it's just really another open meeting. That's going to be on February 17th. And our next general meeting is going to be on March the 5th. So that really, unless there are questions, and there I have no closing remarks. So do we have any other questions? Gloria, I see that looked like you kind of hung in there with us for the whole meeting. Do you have any
Mhm.
questions?
Not at this time. Thank you
Oh,
for asking, though.
absolutely. Thank you for staying with us. Ladies, are there any other questions or comments?
No, great meeting. I just have a motion to dismiss.
What? You really want to go? I had something else to say.
And
Okay.
acknowledge Zelda. Is she still with us?
Yeah, I did again. We can do it again, but I did it
You
again.
did. Yeah.
Thank you.
Zelda.
Yes, I'm still here.
Oh, thank you, Zelda. Good to see you.
You're welcome.
Yeah.
You too.
Okay, so we had a motion to adjourn the meeting. Did we have a second?
I second it, Doretha
Okay,
Dennis.
okay, very good. Motion and second. Any discussion? Okay, let's adjourn this meeting and we'll see one another on Tuesday morning. Actually, we need to talk. We do. Make sure we know what's going to already happen. Wonderful meeting, ladies.
Planning session Monday morning.
Okay, very good.
Mhm.
Is Mia still on here?
I
Yeah,
am. Miss Ann, you want to stop the
I was
YouTube
just
live
trying to,
stream?
I was trying to say that so we can tell everybody, if you're interested in any of this information, you can reach us at nabwic.org, nabwic.org, and we will in the future have a JPEG, a QR code, or something that you can scan if you're interested in membership, because membership is a large part of who we are, what we do. And in the future, we will continue to repeat that throughout this 2-hour presentation, that this is about membership. You can go to nabwic.org and you can connect with us there. Thank you for joining. And this has been the National Association of Black Women in Construction Investment Club.